Hey everybody, Smart Silver Stacker here. Hope you're doing well. The trade war under Donald Trump continues to escalate. Yesterday we discussed the 25% tariffs which are set to go into effect against the US's largest trading partners, that's Mexico and Canada, starting February 1st. But now it appears that Russia and China are also in the tariff crosshairs. One thing that all of these countries have in common is that they are major producers of gold and silver, and they are critical to precious metals supply chains. But it really is a perfect storm brewing for the metals here, and especially silver. Today, Donald Trump announced a $500 billion project, collaboration between major industry and government, which will lead to skyrocketing demand for the metals at the same time that supply chains are coming under pressure. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. If you're thinking of stacking some precious metals, it's incredibly important to avoid common pitfalls, counterfeits, scams, high premiums. There's a lot of things out there that you need to be aware of. For that reason, I have created a free report about avoiding costly silver stacking pitfalls. You can get a free copy of this by signing up for my e-newsletter. There's a link down in the description. You will get a copy of that free report in the welcome email to the newsletter, so check it out. All right, so let's talk about this burgeoning trade war and why it is likely to send the prices of the metals significantly higher. Yesterday, we talked about how Mexico, the world's largest silver producer, and Canada, the fourth largest gold producer, have sanctions imposed on them very soon, starting February 1st. But now the Trump administration has actually threatened Russia, a major producer of metals, the second largest producer of gold worldwide, also a major producer of platinum and palladium, the platinum group metals. And this tariff threat regards the war in Ukraine. Donald Trump's plan to bring an end to this war apparently is to threaten Russia with tariffs and sanctions if a peace deal is not reached soon. And while ending wars is typically a good thing, if you ask me, this does have the potential to roil precious metals supply chains. And China is also in the crosshairs. China is the world's #1 producer of gold, the biggest producer worldwide, also a major producer of silver. And I don't think that that comes as any surprise that they may be in the sanctions crosshair, but it's getting real. You know, these things are set to go into effect in very short order, and we're going to begin feeling the effects of it. Donald Trump has now floated the idea of a 10% tariff on China, and that will likely lead to higher prices for a variety of goods. In this case, perhaps not gold, because while China is a major producer of gold, they also tend to keep that gold production domestically. But silver in particular, I think, is going to be an issue here when it comes to the tariffs. I found this data from the OEC, that's the Observatory of Economic Complexity, and they've compiled this data that dates from 2022 regarding silver imports. This is the most recent data I could find. But in that year, the United States was the world's biggest importer of silver, importing about $5.81 billion worth of the metal in that year. And so if anybody is going to be affected by tariffs on the precious metals, it will be the United States. Now, also, the Trump administration today announcing this new project, Project Stargate. This is a $500 billion collaboration backed by the U.S. government with strong government support, that's the verbiage anyway, between OpenAI and financier SoftBank to build artificial intelligence infrastructure in the US. Now, this is going to lead to a lot of demand for silver and for copper. AI infrastructure equals electrification, and that means you need to build generators, you need to build wires, and also you need to build a large number of small electrical components, many, if not all of which contain small amounts of silver. But $500 billion is a lot of investment. And just think about this in terms of scale. This is a $500 billion project, which will be playing out over the course of several years. But consider the market cap of global silver production. Every year, about 1 billion ounces of silver, give or take, are produced by mining and recycling. So the entire market cap at today's prices of around $31 per ounce is $31 billion. So you've got a $500 billion infrastructure project. You also have tariffs, which are going to increase the cost of importing this metal. So what's that going to do to domestic supplies and the domestic price of silver? Well, it means that the price is going to have to go much higher to allocate the scarce supply of silver efficiently. Now, I use that word scarce, and I know there's going to be a bunch of people who leave comments saying there's no scarcity of silver. Well, listen, when I use the word scarce in economics, like everything is scarce, right? If there's not an infinite supply of it, it's scarce. That's what the word means. It doesn't mean that there's a silver shortage, although there is a massive silver deficit to the tune of hundreds of millions of ounces over the past several years, and that could very well be exacerbated by large subsidized multi-hundred billion dollar projects, which lead to the consumption of additional silver. Also, consider this, that the tariffs, one of their stated purposes, not the unintended consequences like skyrocketing precious metals prices, but the actual purpose is to onshore manufacturing back to the US. Well, that means that that industry, which is reshored to the US, is again going to need more silver. Silver is predominantly an industrial metal in today's economy, although, the Russian state fund, they're buying it again, so maybe it's getting remonetized in some ways, but that's a topic for another video. But to the extent that manufacturing is reshored to the United States as a result of these tariffs over the next several years, that means there's going to be more demand, and as a result of these tariffs, it's going to be more costly to import this metal. So that means that domestic supplies, like this ounce here in my hand that's already in the US, and the silver that is in the hands of every stacker in the US, could soon become significantly more valuable. So the fundamentals for the precious metals are looking excellent at this point. Let's take a look at the charts of both gold and silver. First, though, I want to take a moment to show you the new Florida goldbacks. I've got a Wyoming goldback and a Florida goldback here side by side, just to give you an idea of how amazing the artwork on the new goldbacks has really become. So, I always liked the art on the goldbacks. It looks really good, I think, but the new Florida goldbacks, which have just been released, you can see the difference here side by side. Really some amazing stuff. Let me know what you think in the comments about the new goldback art. I think they've really outdone themselves with these new Florida goldback designs. Okay, so starting off with the chart of gold today, you can see that gold is very close to approaching its record all-time high. Right now, at the time I'm recording this video, the gold spot price is around $27.55. That is just a stone's throw away from the record all-time high of $27.90. And I would not be surprised, given the uncertainty surrounding the current economic environment and the way that gold has responded thus far to this tariff news and to news of the trade war, if we were to see a breakout above $2,800 here in the first quarter, certainly in the first half of 2025, and that likely will be the catalyst for a breakout to new record all-time highs, possibly even above $3,000 gold in very short order. Once we get above the resistance right around 2,800, I think that the gold price is going to absolutely take off. Now, going to the silver chart, silver today is around $30.81. It's hanging in there. It's just slightly in the green today, but it looks like silver is consolidating and ready to break out with gusto out of this downward sloping wedge that it has been consolidating within for months. And that is going to mean new highs for silver as well. Now, I don't know that we're going to hit record all-time highs in 2025 for silver, but once gold really starts moving, that tends to get some enthusiasm around silver as well. And I believe that we are set up here, when you look at this chart, to take out the $35 high, or to break above $35 like we almost did in 2024. That's a significant move up from today's prices, and it would represent the highest price in over a decade. But when you consider the fundamental picture and the effects of these tariffs on silver, I think that's just going to be the beginning. And finally, let's finish up with the chart of copper. Today, trading around $4.31. Copper has broken out from its downtrend, which began in September of last year. But if we zoom the chart out a bit more, you can see that there's an additional downtrend, which involves the record highs earlier in 2024. And this line appears to be giving copper some resistance. But once we get above that, and look, a $500 billion plan to build out AI infrastructure combined with tariffs on major copper producers could certainly be the catalyst to drive copper to a new bull market and once again take out new record all-time highs, just like it did in 2024. So if you ask me, the picture here for the precious metals, I mean, it really is like a perfect storm. I don't think that the picture could be much brighter for the future of gold and silver, but leave me a comment down below to let me know what you think the effect of the trade war will be on the metals. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.